Okay, emergency day in a life. All of you know where we are. All of you see it in the background. I told you every single morning this is gonna start here. 4th of November. What happens on the 4th of November? Or is it 5th? Oh God. Today is the 5th of November. I was wrong. I don't know what day it is. I just know it's election day. Emergency day in a life. There's going to be a lot to learn over presidential election day. I've traded through presidential elections once. I've studied the 2016 presidential election. So today there's going to be a lot to learn, so stick around. So this week I was supposed to do 2 live streams inside of the Simple Trading Edge, but I'm actually doing 3, and one of them will be going over the presidential election price action, because I do believe that there's going to be huge amounts of volatility today. So let me show you. So this is the schedule. So from 3rd to 9th of November, we have on Wednesday election price action live stream. Then we have on Thursday FOMC tape reading, and then on Saturday we have the weekly review to review the weekly price action on elections and a Q&A. Now the reason why this is Wednesday is because it's at midnight here in Dubai, which means that it is one day prior, which means still 5th of November in the United States of America. Now, given that it is presidential election price action and it's 8 a.m. right now, I'm going to go read now, but I'll come back to this video on midday because that's when a London session starts, and I think this is going to be a long day. So this was the intro. Let's get to the value. Okay, it's finally 8 a.m. It's finally London session in London. Well, everywhere, but it's midday here. As you can see, I don't expect the market to do much in general overall until the election start, and all of the price will be moved because of the election expectations. You can see pound dollar moving a little bit, but it's always consolidating in this range, which is something that you can expect just before high impact news. The market generates this liquidity. The market does not know where it is going, so it's just constantly getting buyers and sellers involved in the market, and then eventually it will move in either direction, or as some people would say, it ranges, builds up all of the liquidity, then destroys both sides. So with that being said, still taking a chill pill. Let's wait until the election starts, and I'm just going to continue doing my thing. I've been reading a little bit, watching a couple of podcasts while I do some work. People inside of the Simple Trading Edge are doing a backtesting session together. Let me tell you, there's no community like this. There's no community doing this on a weekday. So before we keep going, and before I go and do something else, let me do a prediction for the DXY. So I believe that the DXY today and tomorrow is going to approach the upside. I can be completely wrong, and if that is the case, I will completely delete this. But if I am right, I can boast that I have this clip of me saying that DXY is going to move to the upside. So if you're watching this, very likely it went to the upside. Just kidding. I will post this either way, because if it now goes to the upside and I say this, completely discredits it. So I do think it's going to move to the upside. Yeah. So this is the thing. Kill zones basically mean that the market is more volatile. There's more traders in the market. That also means that the market should be a little bit more precise. It doesn't mean that it has to be, it means that it should be. Okay, everyone that is watching, I've gotten lunch, and let me give you another piece of information. So I posted on the community notes that I'm doing 2 day in the lives in a row, and someone asked, do you think it's okay to trade today? I think it's important to explain something to everyone that is watching and everyone that wants to become a profitable trader, and that is, there's a difference between when the market moves versus when the market gives you an opportunity. Just because the market moves from point A to point B does not mean you need to execute from point A to point B. So even though I believe that the elections are going to be bearish for euro dollar, bullish for DXY, even bearish on NASDAQ in the short term, and then we'll have the move to the upside, does not mean that I need to be trading today, because else this is going to happen. So let's say that you are a trader. This is you, right? You have very big legs compared to your body, which is fine. Let's say that your daily bias is bearish. And so you expect the market to move to the upside and then start to move to the downside. What is going to happen eventually in your trading, especially if you are the type of trader that is trying to trade the elections, is that you will try to call all of these markets from here to here, then from here to here, and then you'll try to call this reversal, and then you'll try to call this and this and this. What starts happening is that you want to take advantage of all of the movements in the market, not understanding that you can just focus on particular parts of the movements of the market and you can make consistent returns from it. Because what you are saying in your forecast most of the time is, I know that the market is going to reach this level. That's my bias. When I say that my bias is bearish, normally I'm saying that I expect the market to move lower. But then what a lot of people start doing is, okay, so if the market is going to move lower, but first it's going to move higher, I want to trade the longs first and then trade the shorts. So what ends up happening is that they take the longs and then they don't take the shorts that they always forecasted because they are still waiting for the longs to play out. Now, the reason I say this in terms of elections is because a lot of people are going to see the market moving and they're going to think, oh my God, I should have executed. I knew it was going to go in this direction. Well, first of all, if the market would not have gone in that direction, you would have think, oh, well, thank God I did not trade. Or tomorrow or this week, you are going to think, oh my God, I should have not traded today. Because let's say that you trade elections. What holds you back from afterwards trading CPI? And then afterwards trading NFP, and then afterwards trading FOMC, right? It's this whole notion that maybe if I gamble once, it's no problem. Maybe if I use this substance once, it's no problem. And then it starts. So now that that rant is over, it's time for a meeting.
That's a bit harder.
Yeah, I would do similar to what they have. I do think it looks better. It didn't work again. So, I'm outside, enjoying the view. The pool is right there. I should have gone to the pool today. Okay, it's decided. Today's gym session / cardio session is going to be done in the pool. So I'm going to get ready and I'm going to go to the pool. Again, there's nothing in the charts. Okay, so price section is still just range bound. Like we just started New York session basically, so this is 7 a.m. Eastern Standard Time, but in a couple of hours we will start seeing a little bit more volatility. So as you can see, from the moment I woke up, 7 a.m. here in Dubai, it's now 4 p.m. here in Dubai, still nothing at the charts, because again, you need to be able to identify low probability and high probability trading conditions. I'm not interested in anything now. Pool session is done. My hair is looking crazy. There are people that don't know how to behave in the pool. Hey, why is my face looking like that? It's crazy. But it's now 5 p.m. or 8 p.m. here. 5 p.m. which means that the stock exchange opens in 30 minutes. So let's go upstairs. Let's take a shower and then watch the stock market and the drama unfold. So it's currently 5 p.m., 5:10. And as you can see, for today, the only thing I did was nothing related to trading. Why do I say this? Because I wanted to make this video to show you that even though I am a full-time trader, I don't try to predict and trade low probability conditions. And that is one of the curses of being a full-time trader. Believe me, it's like not every day is a trading day according to your plan. Maybe it is, I don't know. According to my plan, it isn't. Meaning that a lot of the times, like 95% of the times as a trader, what do you guys do? Sit on your hands. Like that's what you have to do. Then you forecast, then finally things go according to your forecast, and that's where you execute. But a lot of your time as a trader is going to be about, hey, okay, I'm not going to execute right now. It's not the time to execute. Doesn't really matter. Let me wait for tomorrow. What are you going to do the whole day? Let me know in the comments. Now let's get into some charts. I'm eating some M&Ms. Looking at the charts, there's actually still 1 hour until the market opens, which is which is crazy. But I see one thing that leaves me very happy. Look at the number of people in this live backtesting session. This is amazing to see. And now I will join them for an hour and then let's see. If 1 hour order flow is not bearish and I'm in a losing streak and I want to take a short, I'm not entering. Okay, the market is open. One of the things I do when it's very lower probability conditions or very volatile, what I do is I try to have precise entries. And if I have precise entries, meaning smaller stops, and meaning waiting for way more confirmation, and I will show you exactly how I executed and exactly how I managed. So we just reached the final target for me for today, which was right here at the daily fair value gap and order block. I do believe that from now on we could be moving to the downside on NASDAQ. It's possible. Given this, I was looking for reasons to, at market open, take the trade towards this high and then eventually towards these equal highs, which you can see. So this is black line right here and this is green line right here. And even though the first one I wasn't able to take advantage all the way towards the high because I will show you how I managed, it's very aggressive. The second one came all the way back towards the order block, and then afterwards, as soon as I saw confirmation that we were reacting out of the 1 minute order block, I executed and the market quickly moved up to the next high, in which I managed aggressively and I was able to secure 1 to 3R. But again, 1 to 3R, here we're talking about $200 risk, which means that this 3R was actually only a $600 win when a 3R normally is more than that. But you can see exit right there, very nice, $905 on the day. And now we wait. Personally, I do expect a big drop from where we are at right now. Do I want to execute on it? If there's any high probability setups, I'll execute on it, but I'm being very careful because the further on we are into the day, the higher the probability of a lot of extreme volatility coming in, given the fact that the results of the polls will start to come in, they will start to count it, and the market will try to price something in, and that's where the volatility will come in. So can you see, this is volatility starting to kick in. I think we can clearly see election volatility. That to me means no more trading for today. I was able to take advantage of the move that I expected to happen on the day. Now, as soon as I see a big injection of volatility, that to me is no more trading. This is what I always heard from a previous mentor of mine, and we used to say this all the time, which is like 1 month does not make or break you as a trader, 1 quarter does not make or break you as a trader, 1 year does not make or break you as a trader. I could be unprofitable next year and I would still believe that I'm a profitable trader. Okay, so I have just recorded a video for YouTube talking about the trades that I have taken. Now it's time to edit it and then post it on YouTube. By the way, if you guys have been watching those videos, then let me know if you like them. I'm planning on doing basically 1 video Tuesday, Wednesday, and Thursday. If I take any trade, even better. But and then keep up with these videos because you guys, because I like to put work into the videos like day in the lives. But yeah, let me know if you like those videos and let's keep going with the day in the life. Thus far, let me show you. Like until now, we haven't been seeing much happening besides the stock market just moving up. And then euro dollar also like very quick move to the downside right here. And then if I'm not mistaken, this was in 1 minute. So an 18 pip move, if I'm not mistaken, in 1 minute right there. And then we just proceeded to move to the upside. But on FX, I'm really like zero interested in trading. And the same thing with futures. I talked about this in the video. If you understand that it's not high probability conditions and you for some reason were able to profit, just call it a day. There's no need to be trying to constantly trade. How many times would you have been better off if you would have just stopped trading after 1 or 2 winning trades? Right? Think about that. I think that is very important. So let's do the editing and then posting. The market basically hasn't moved at all. The market basically hasn't moved. We have no results on the elections. So the only trades I took was on NASDAQ. And let me tell you, Oh my god, this looks, I don't know, this does not look great for NASDAQ. I don't think this also looks great for Bitcoin, but it's currently midnight. So what I'm going to do, the polls really start closing in around 5 hours time, 6 hours time. So you'll see me very soon because else this really short. And I will give you election sauce tomorrow, which means still in this video, stick around, subscribe. Okay, it's 7 a.m. and we have a lot of development. So let me show you, let's go to the charts. So the reason I'm making this video is because I want to show you that no matter if you call the market perfectly, you don't need to trade it, right? I'm looking at the charts, I'm just enjoying it. I'm not thinking about trading it. I'm just looking to see the reactions. I love to see how extreme high impact news impact the market. To me, it's like a studying opportunity. And I was talking about this with a student of mine. So this student is always trying to call the market manipulation, trying to trade the highs and the lows. While myself, I'm just trying to trade the move that I expect the larger move to happen. And now, who do you think had better results? Was it me that took around 10 trades in October, or was it him that took 20? The answer is myself, and I say this even though I know that he joined the Simple Trading Edge 2 months ago, but there's a big need that people have in executing in line with what they think that the market is going to do, when the key to profitability is being okay with seeing the market move and you not being in it, because you are not meant to be part of it, right? That is a tiny detail that many miss because they don't want to accept it. So we got the coffee. Let's go back to the charts. So for everyone that is watching, this is what happened over the weekend when the market thought that Kamala was going to win, which means the market was repricing something else in. And now, as we get the reaction, boom, it absolutely drops. And by the way, extremely important to mention, I don't really care who wins. This is not political at all. I'm not trying to be political. I don't really care. We're going to make money either way. Okay, so I'm still watching all of this, watching the live stream, and we're seeing right now nice reversal on EU after what? After we close the daily fair value gap. Right there, this is a level that we had marked out for a long time, and then on the weekly we can see that we have reached the volume imbalance, and now we'll see. It's going to be interesting to see what Eurodollar is going to do for the rest of the day. We are starting to retrace, so now I have nothing to do at all. We'll see what happens after it gets decided, and from what I'm seeing, it's overall decided that Trump is going to win. The markets has it at a 95% chance of winning. So it's basically decided, but we'll see how price action reacts after it is announced. Okay, so right now, I do believe that we will see some reaction in the market, given that a lot of new votes are going to come in. So let's see, in the 5 minute, we'll see how this reacts. So basically what is happening is a state that is very important is releasing more votes, and then we will have further information on if it's easier to call this as done or not. So I'll leave this here and let's see how this reacts. This is the 1 minute chart on EU. From the moment I mentioned that there's going to be a little bit of a dump in terms of votes, notice how this moves. And this is the 1 minute. This is basically no movement, but this is a 23 pip move towards the high. That's a 26 pip move, 27. So this is one of the reasons why you don't have that much of an edge. Your stops would have to be absolutely huge. That means that you would need another 200 pip move for you to have an acceptable risk to reward. So again, no trading for me. Okay, this is it. This is close to the end. We have the final deciding state. What I told you guys is that Pennsylvania was going to be the one that puts the nail in the coffin, and because of that, Trump has just won the elections. Basically, it's basically confirmed. And as you can see, the market kept on moving to the downside, and I still believe that the market is going to continue moving to the downside. We just retested the order block. I do expect further downside. So now the question remains, am I going to trade or not? Well, first of all, the reason I made this video is to explain to you guys that even if you are profitable, does not mean that you need to take advantage of every single move. Again, I said I expect euro dollar to tank today. I saw it at the weekly fair value gap and I forecasted the move to the downside, but again, I don't have to execute on these moves because you need to understand, a trade is basically you got the direction right and you execute it. That means that if you get the direction right, the only thing missing between you and profitability is then the execution. Now, as a profitable trader, you don't have to execute every single time you have a sense of direction. That is going to be a path to self-destruction because you will have such a great read on the market, but because you're always going to be trying to force a trade in line with any type of direction that you think the market's going to take. Oh, I think it's going up, then down, then up, then down, then down. You are going to fall into a negative cycle, and it's really going to hurt you. Focus on the meat of the move. You don't need to call the high, you don't need to call the manipulation, you don't need to call anything. You need to see the market going in your direction and trading in line with that direction, and not the counter trend move into the pro trend and the counter trend and then take perfect profits and then enter again, so on and so forth. That is the downfall of a lot of traders. And so in these past 2 days, you saw me forecasting the direction, executing on very precise entries, and then watching a huge move play out without having FOMO of wanting to execute. And that should be your target as a trader. See a move play out and don't have FOMO that you have to execute it. Okay, so this is it. I hope you guys enjoyed. I hope you guys were able to take some value from this video. And again, don't get FOMO. Yes, maybe you forecasted the move to the downside on EU and you didn't execute. That doesn't really matter at the end of the day because our goal is to be here in the next 5 years. And so one trade, like 5 moves, missing 5 moves does not make or break you as a trader. Because don't forget, a trade not taken is also a trade not lost. So I hope you guys enjoyed, and I will see you in the next day in life. Peace.